All right, and welcome to this very special webinar that is brought to you by FTM Daily. My name is Jerry Robinson. I'm an economist here at FTM Daily, the founder of our website, and I'm joined in a very special webinar, this very brief webcast, with precious metals advisor Tom Cloud. You know him. You've heard him on our broadcast several times. Today, we're talking about a very interesting topic that we have never talked about before prior to this webinar, and that is how to create your own gold ETF. Now, some of you may not know what an ETF is, and that's fine. For those of you who don't, it's simply an exchange-traded fund. Many people today have a couple of options. They can, when they want to invest in gold, they can go out and buy physical gold. But many people don't know how to do that, or maybe they don't feel comfortable doing that. And so instead, what they do is they will take their money that they want to put into gold or silver, and they will use that money to purchase an ETF on the open market. This does not actually give them physical gold and silver. Instead, it gives them a paper version of gold and silver. And there have been many different controversial statements made about ETFs and whether they're backed up by gold or not. And it's a very controversial topic. Nevertheless, today, Tom is going to be joining me because we really want to talk about this because, you know, things are getting very, very difficult in the world of global finance, especially as we take a look at what's happening with cash. The war on cash is intensifying. Tom, you're on the line here with me. Thank you so much for joining us. Let's talk about this war on cash that is intensifying. You've been seeing it over the years. You've been doing this for practically 40 years now. And you've seen this war on cash greatly intensify over the last few years, haven't we?
We have, Jerry. And I mean, with the ones out there that are technical people, you just look at the M2 money supply that's gone from 6 trillion to 12 trillion under President Obama, and with only 0.5% of that being in physical cash, paper cash, and coin cash in this country. So we're already down to 0.5%. We're already 99.5% electronic, and I think there's not a person listening to this that doesn't believe at some point in the near future there'll be cashless societies, and we've read about it from biblical times all the way up to current economists talking about this. So, but it is intensifying. That's the key word that we're using here. Our clients have got to get their money protected and get it out of the banking system and into things that are not going to be affected when this war on cash and this bail-ins that have already started in real big over in Italy the last 3 weeks. We're seeing 2 major banks take money from their depositors. So all this is intensifying, and that's one of the reasons we want to get as much information to the public as we can.
Yeah, there was even a report just the other day about the largest bank in Norway calling for the end of cash. It seems as if, due to the fact that it can be easily used for laundering money, drug money, can be used for all kinds of other insidious purposes, the banking industry is trying to move away from cash and more to this electronic type of money, which has certainly dominated our current monetary system. But the banking industry is becoming more inhospitable to those who are holding precious metals within the banking industry, and it's a concern. So, Tom, tell us before we talk about how to actually create this gold ETF and how it works, tell us who are the kinds of people who would really benefit from doing this?
Well, Jerry, it'd be almost anyone. I mean, even anyone with $10,000 or above that as a percentage of their assets are going to buy precious metals, gold and silver. And like you said earlier, not everybody feels comfortable hiding the gold or silver in their house or putting in a bank safety deposit box, especially, as you said, we see what Chase Bank did recently when they sent out letters telling their clients there was no longer a insurance policy by the bank for precious metals or cash that were in a safety deposit box. So if a bulldozer backed up and knocked a small bank down and took people's metals or cash, they would have no recourse on it. So people are getting concerned. So this is for the the person there that says, I know I've got to get out of physical cash. I've got to take my bank accounts lower. The risk is too high. I've worked too hard. And what we do is we'll get into in a minute is we arrange for them to have storage in one of the 9 COMEX warehouses in the world at prices 1/3 of what the normal people are paying because of my relationship with this particular COMEX warehouse. And we'll get into that detail here in a few minutes. But pretty much, Jerry, it's anyone that's got $10,000 or more to move in. And we just did one this week for nearly $3 million that a client moved into this ETF, and he just said it, woke up one day and realized everything he had in his portfolio was paper. Stock, what is stock? It's a piece of paper. You have nothing hard, no hard asset for it. So he woke up one day and realized that he had to have some physical hard assets that had worldwide value in it. And even though $3 million is a tremendous amount of money, it's for his portfolio, it was, like 10%, something like that.
Let's imagine for a moment the ability to create your very own ETF backed up by your own precious metals. This is a really interesting concept because people who go out and invest in gold ETFs, maybe GLD or PHYS, or maybe they like silver, SLV, they invest in these ETFs, and maybe they invest $10,000, $20,000. But what the problem is that they're not going to get any kind of inflation protection in the fact that they won't be able to take that gold out of that ETF and take it for their physical, for their own physical purposes. They cannot actually have that physical gold in the ETF. So they're simply owning a paper version. Other people that you had mentioned may have their gold sitting in the banking system, maybe in a safe deposit box. And again, that is a problem. So imagine being able to create your very own ETF backed by your own precious metals, holding your precious metals outside of the banking industry, which is a huge benefit and is becoming more increasingly popular. And as Tom mentioned, holding these precious metals that are your own in one of only 9 COMEX-approved warehouses in the world. And I think this is probably the most amazing part, Tom, is that if you do open your own gold ETF with you, then you have 0 shipping costs to buy or sell precious metals while the account is open. That's probably the biggest thing, because that's why people go to ETFs, is because of their low cost. That's why they use ETFs, is because they don't want to have to pay a ton in fees. Well, here you can have the physical backed gold that you can call at any time back to your person, but it's held in a COMEX-approved warehouse, and there's 0 shipping costs to buy or sell the metals. Tell us more about this.
Well, Jerry, what we've done is we've entered into an arrangement with International Depository Services, better known as IDS Delaware and IDS Canada. IDS Delaware, even though they're both owned by the same people, same companies, the one in Delaware is a COMEX approved, and the one in Toronto will be at some point. They're doing all the final work to make it the 10th one, but as we speak right now, the one in Delaware is already there. So if a guy buys 10 ounces of gold and doesn't want to take possession, we send it, like you said, free to IDS Delaware. They then will send a email to the customer, say we received 10 1-ounce gold bars or gold coins on your behalf. Is that the correct amount? And you say yes, and then it goes into storage. My clients get 9 months free rent, first 9 months free rent, and then after 9 months, I'll say that client had put $100,000 in, he'll get a bill for the next 12 months for 1/4%, or better, 25 basis points, or another description, $25 per 10,000. So someone could store $100,000 worth of gold or silver in this warehouse for $250 a year, when everybody else is paying $750 to $3,000. We see some of these warehouses for $100,000 charging up to $3,000. It's crazy. So that's it. And then, as you said earlier, when they're ready to sell, every major wholesaler that we deal with has an account in that warehouse. So when we're ready to sell, all we've got to do is move it from the client's account to the wholesaler's account and get paid. So our investor never ends up with any shipping costs to receive the metal. It doesn't have to pay any shipping costs to sell the metal. He's only going to pay 0.25% per year storage fees after the first 9 months free. And like you said, if they decide at some point they want their metals, they will have to pay a $20 handling cost plus the actual shipping and insurance to get it to the client. So, but still, it would be a small price to pay for the independence and freedom that they had during that holding period. So that's
so
how
true.
simple it is. And Jerry, it's, before we got to release it to our broad client base, we still haven't, but just some of my clients been around 20, 30 years. It has been unbelievable, the interest and how people have praised how smoothly it works and how comfortable they feel having their money in something that is going up. And just this year, as we record this, gold's up 6.7%, the Dow's down 9%. There's a 16% difference in a little over a month. And until all these things blow over, which never will, the talk of war, whether you're talking about Iran and Saudi Arabia or Israel and somebody else, or you go through all the banking problems right now in Italy and the bail-ins going on, the small percentage in cash, we just think this thing is kicked up. The next several years, we're going to see gold go to some of the prices we've talked about and seen in the past because it is drying up. Supply is drying up both for gold and silver worldwide.
So whether you have money in a gold ETF, let's say you have money in GLD, for example, I believe their annual expense ratio is about 40 basis points. Well, you can instantly save money by moving your ETF holding into your own ETF and actually own the physical metal itself and be able to call it to yourself at any time, which is amazing and much, much, much more, I would say, in line with what many investors are purchasing gold for. They want it to be able to hold it physically, and they can't do that with a small amount in a little gold ETF, but they can when they create their own. Also, for those who have gold holdings in the banking system and are concerned about that, this is a great solution. It allows you to get it out of the banking system and into a COMEX-approved warehouse at dramatically reduced rates. And this is a very, very compelling offer, Tom, for those who do have gold, I would imagine, in the banking system.
Well, it is, Jerry, and anybody's got ETFs. They just sell the ETF and have a capital gain or capital loss and then buy the physical, and that's what we have seen so many people do is sell that and create their own and have that. And also, because this question will come up, if they buy $10,000 or more, gold, silver, combination, and they're already holding gold and silver and are scared of holding it, they can then send it to their account in Delaware. The only thing they won't get is any 9 months free rent on that part. They'll start charging them, but they'll just charge them the 1/4 of 1% that I set up. So even some people have already mailed metals that they didn't feel comfortable holding that they had purchased from us and sent it to, we'd give them how to do that. But first of all, to have the account set up at the rate I've negotiated, they would have to buy it to get the account open. Then after that, they could send in whatever they wanted to.
Makes total sense. If people want to talk to you about this directly, Tom, they can call you at 800-247-2812. The number here is on the screen. Just tell them what they can expect when they call. I mean, what does the process look like?
Well, the process calls, and they'll, even though Kathleen, Dan, and I are the traders, Dan or I will be the two that will speak to you, and we'll identify what you're looking for, how much you want to spend, and whether you want gold and silver or just one or the other. We're happy to give you our opinions on those as we do on Jerry's FTM Daily Weekly during the year. and then it's just deciding, what you want, and then we place the orders just like a regular order. And when you receive the invoice, you send us a check, and 2 days later, rather than mailing it directly to the client, we mail it to IDS, Delaware, or Toronto. Now, you can still put it in Canada. It doesn't have to be in Delaware. It's the same deal. And at some point, Toronto is going to be a COMEX warehouse too. So, and even though it's not, it really doesn't mean anything to the investor. It just shows that there are ETFs stored in IDS, Delaware. So if you're buying that, but of course they're storing a percentage of what they've got, not the whole thing. So, and we'll talk to them about that. But you really want to stay in Delaware unless you're planning on just buying and selling. If you're ever thinking about taking delivery, you got to stick in the United States. But if you're just buying it strictly to have that percentage in there and know you'll never take delivery, Toronto's no different. You can put in Toronto IDS, and it's no different.
Well, very good information. I know there's probably many more questions. Folks can give you a call directly, 800-247-2812. Simply call Tom and simply say, I saw the video or I heard about the gold ETF and I'm interested in learning more. And he can walk you through the entire process. Very simple. And if you have $10,000 of metals stored outside the U.S. banking system, can you imagine you can do that for only $25 per year? That's exactly what this is. It's a very compelling offer. And, Tom, do you see this going up in price over time, or is this a fixed price?
It will not go up till the end of 2017. They did leave that open to change it, but even if they do, it'll still be half or a third of what everybody else is paying. So everybody's would have gone up if the insurance costs go up and they can't, make a profit, then definitely they'll raise it some. But I still don't see it getting over a half of 50 basis points at any time. But this year and next year, it's going to be this 1/4 plus 9 months free.
That's fantastic. Thank you so much, Tom, for filling us in. Folks can give Tom a call, 800-247-2812, with any questions. We sure do appreciate your time, Tom.
Thank you, Jerry. Enjoy it.